year that changed banking for life. Now, I know it's a very melodramatic way of introducing a topic for something that is about to be discussed out here, but in so many ways, this is really the eternal truth. So much has changed in this 1 year, so much has changed in this moment that we are around right now, and banking has been really the big catalyst that has brought about that change. I have a fantastic panel which has been introduced now. Let's get started with the panel and let's find out. So once again, we'll go through the same thing just to get a sense of where everybody is. I'd love to know where you think it stands. So many different things have happened. Some say for the good, some say not so good. Love to know in a quick 30-second down the panel, get a sense of what and where you stand.
So if you ask me, one major thing that has happened as part of this 1 year post demonetization is the fact that what was earlier only an option of a POS and a debit card has now extended to so many different options. You have ended up confusing the customer, but at least you have now multiple options which are CAPEX and non-CAPEX based for the merchant. So that has suddenly made the 30 million merchant market, which is supposed to be digitized with the current breed of 3 million POS terminals, has a huge potential available for converting the $2 trillion cash market in physical payment, physical retail payment into digital, which currently is 95% still cash.
Obviously optimistic, like I said in the previous discussion, for an organization of the kind of business that Oxigen is in. This is a mantra from heaven, right? Demonetization, digital move, everybody talking about it. So are you and your organization very happy campers right now? Are you literally laughing your way to the bank?
So I think there is a big difference between rest of the wallet company and Oxigen, because Oxigen has a very significant offline presence. Bulk of the wallet companies have been converting digital to digital.
Correct.
So you have a credit card, debit card, net banking converting to a wallet. Oxigen, before demonetization, was doing a huge amount of cash to digital. So there was an impact on that because cash suddenly disappeared, but what it gave was a very big impetus to do digital in an offline world to digital, which means you have a customer with a debit card or an Aadhaar or a QR code or a UPI to convert to another digital form where you want to do remittance, you want to do payments, you want to do assisted commerce, or you want to do merchant payments. So that became a very, very big, because most of us talk about the e-commerce and the wallet for e-commerce, which is a $20 billion market. Bulk of us do not talk about the $2 trillion retail payment market, where 95% is cash. And that is where digitization needs to happen, because online you do have right now multiple means. You have a card, CVV, you have cash on delivery and all that. But on physical payment, you have a big problem that you don't have a terminalized or a digitized merchant base which can do the cash to digital.
Okay, all right. So Rahul, to you, the year that changed banking forever is the way we are going about it. Where do you stand on it? Has it been as, a huge leap of faith, as a lot of people call it, versus a huge leap in terms of what we've gained? Which way do you stand?
No, I think we stand as a huge leap of faith and a huge change has happened. Clearly the pros and cons of the demonetization move were discussed. So leaving those aside, from a banking perspective, I think we love the fact that we are a new bank. We just launched this year, and therefore for this change to happen at this point of time gives us opportunity of going ahead and executing the banking solutions in a manner which were otherwise would have taken much longer to implement. Okay. So fundamentally the Aadhaar implementation, the rollout of the hardware, the data networks, we are seeing a big push on the data availability in the country. So the technologies are really coming together, and instead of building the bank in a more physical infrastructure way or using more traditional solutions, we are in a position to sort of actually implement some of the digital solutions from day one, and that's what we've exactly done. I think to Sunil's point, on the payment side, clearly it's a phenomenal change. A large part of our business is base of pyramid business, where we give, we are one of the people, like Sunil was referencing, who give out loans in cash and who collect the loans in cash. and that was a traditional microfinance model done over decades. Now, because of all the changes, clearly we can sense that there will be a point of time shortly, maybe a year forward, maybe 2 years forward, I think, where we can turn both of these to non-cash. And but for the big change that is happening in the world today, which is overall, and the big change which we are all pushing together at this point of time, may not have been possible for 5 years. I think clearly it's got accelerated for at least 2 to 3 years ahead.
Okay, well, again, the first two seem to think it's a great space to be in. All right, what's your opinion out here?
See, if I look at in the last 1 year, the three big things which are happening is the demand led to a lot of digital push which is there. The secondly, the GST which has got implemented about 4 or 5 months back. And the third is the usage of Aadhaar, which I think is the biggest, if I look at from a national asset point of view, that is the biggest asset which got created, and the usage has gone up in the last few years. Fino has been into the business of mass market banking, and we take pride in the fact that we work for segments which are between 2 to 5 lakh of rupees of income, and for them digital was not something which was readily there as such. We have to divide India into India and Bharat, which is very, very significant and very important to really answer this question. While on the digital side, India was already digital. Before demon or after demon, a lot of new things have come up, a lot of new ways of doing transactions have actually gone up. But if I look at that, because of demon, the digital impact came and it got faded away, now it is again coming back. But large part of that transaction is being considered or being done at the India level per se. When I look at the Bharat, which is the real market, which is 80% of the population of the country, there the digital knowledge or the digital literacy or the usage of digital was not even heard of. And there I would say a lot of shift is happening, as Rajiv also said, acceleration has happened. So to me, demonetization has resulted in an acceleration of digital payments. More so when I visit the rural places, the mass market segment in Bombay, around Bombay or in villages, I see a lot of people getting ready to accept digital payments, both at the merchant level as well as at the consumer level. And merchant level is even becoming more and more prevalent and important because of the GST. The fact that there will be a trail of banking transactions and tracking of invoicing and everything will happen. People are looking at that change. It is just a matter of time, how soon they will adopt it. But when I look at the real Bharat, which is where the crux of the business is there, and where the demonetization impact also had the maximum impact happened at that population, there people are ready to accept digital. Still the data, the smartphones and other things will follow, the infrastructure will follow over a period of time. But the biggest push is that because of the government pushing the Digital India agenda and pushing the entire incentive scheme around digital, the merchant acceptance levels have gone up. The consumer has started to use digital as a means, and it is very heartening to see when I go and visit some of those locations and meet some of the customers. They are ready to imbibe it. The aspiration of that customer is that, or that local, and when we heard of demon stories also, at that point of time people were more happy because everybody was standing in the line and everybody was at par. There was no difference. So the same thing is happening in digital. Technology is a great leveler, and in a digital space, whether a rich or a poor, it is the same. The technology doesn't differentiate. So from that point of view, people are ready to, they are aspiring to become digital. It is just a matter of time, I would say. Next 2 years, 3 years it will happen, which would have taken maybe 5 years to 7 years. To me, the biggest benefit of demon is the acceleration which is happening on the digital side.
Now, Ratna, what are your thoughts on greatest year ever for banking?
Well, it is a great year for banking. I don't believe in, extreme commendation. So yes, great year for banking. Okay. Having said that, I think there is a need to just step back and look at, this is not the first time demonetization has happened. It has happened before, but what didn't happen before was possibly the access to information around demonetization that we've had this time around because of the fact of the way media is available to everybody everywhere, number one. That has both its upside and flip side, because there was rumor mongering.
Also led to
absolutely
a huge amount of problems. Okay.
Also, I think we need to take into account that culturally we are a cash driven country, culturally. Now, a large part of your population, which is not the 15% which knows everything, the less than 15%, Now, a lot of them have been traditionally dealing with cash. And I think there's a need to understand that different levels of understanding exist at different points in terms of how you access, I'm not talking about banking, but the financial services industry as a whole. So having taken that into account, a blanket demonetization probably could have been nuanced in a manner which could be more inclusive in terms of bringing on board different levels of population with their understanding or limited access to financial services. Having said that, demonetization per se, yes, a good step. What it purported to do, unfortunately, seems to be coming undone. Digitalization, I think, is a offset and is not a corollary to demonetization. Okay. It just stepped in because there was a space that opened up and people saw the opportunity to access that space. Having said that, I think the demand side is far more the supply side is far more aggressive than the demand side, because there's a large part of the population who doesn't really understand what is being offered to them, the choices they're being offered. It's like, I want a cup of coffee, and I walk in and you say decaf, milk, no milk, foam, sugar, no sugar, brown sugar. I just want coffee, right? So that's where it is today.
Okay. All right, but all those other options to do with coffee have made it even better, especially the fact that they write your name on the cup now, right? So customized to that point. Once again, to this panel, I'm just going to emphasize this. We're not just concentrating on demonetization. That's only a very small part of what we'd like to discuss, because I think we've done that in so much detail with the previous. It's the banking sector in itself and everything that has happened or is about to happen that we're really talking about. So once again, the question, a great year for banking?
Yes, absolutely. I mean, demonetization has changed to a greater extent how bankers used to work, how the relationship between the bank and the customers has evolved across. And more importantly, it was an aggressive thrust towards a digitization economy and also to a cashless, more particularly towards a less cashier economy, because we are still, I believe, cash appears to be the king of everything, but we have moved towards a less cashier, and the visibility and the awareness has been created across. Also in terms how the banking system used to operate in India, it was a purely relationship based, but now it has evolved across where you do not know anyone from the bank by virtue of wallets, by virtue of new payment banks. You actually know the system, know the technological integrations, and you can actually trust as to your cash available, your payments in the wallet are safe and secure enough to enable you to do transactions to anywhere and across you want to do it across. Also in terms of apart from the relationships, the entire system has evolved in terms of a paperless, in terms of flash cash, in terms of branchless, and that has changed the entire way banks used to work, the entire financial institutions used to work. So that has led to a significant change in terms of what is going to be coming in the times to, so that there is a sustainable exploitation in the technological aspects on how banks used to deal with their respective customers. And also in terms of, if we talk about the lower strata of the population, the people who are residing in tier 3, tier 2 and tier 4 cities of the country, they are now much more aware in terms of what digitization is. The literacy is there. They are aware in terms of that payments made through digitization, the transactions made on a digital platform can be secured, can be actually trusted upon. And I'm sure with the more level of Aadhaar integration, with the more level of Aadhaar penetration, I'm sure we would reach in the times to come in the next 3 to 4 years where we have a sustainable financial inclusiveness of the entire Indian population altogether.
Okay, great. So now, I'm going to flip the question, because you and me have already had a bit of a discussion on what you think of banking for this year. So let's start off with something that has already appeared out here, and I think it's about 7 or 8 people that have written almost the exact same thing. A lot of what has happened with banking, whether it happened with demonetization or better relationship with customers, people came to know about the fact that you need to have a more technologically forwarded relationship with your customer for the bank. So we seem to understand for banking in general, on the banking side, this has been great. Let's talk about the technology part of it. You think the cost of technology, and this is a question that has come from many people in the audience, the cost of technology hasn't gone down to the level that everybody was able to adapt to it quicker, both on the banking side across the counter and towards the customer side? And do you believe that it's as rosy a picture as has been painted by most panelists? Customers, retailers, shopkeepers, are they really embracing it as much as has been painted on stage today?
Great question, Rajiv, and since we've heard so many views that I had very little to add meaningfully to the volume of data, so thank you for sparing me that. But I'll start with a personal experience, and maybe it's a shared experience for a number of people, because I'll go back to the topic and then veer away to the question that you asked me. Normally there are certain events that happen such a momentous nature that you often look back in time and try to remember that physically, in the sense of asking yourself, saying, where were you when that announcement was made? And I was listening to the topic and saying, well, a year ago, about 8 p.m. when the announcement was, I remember exactly where I was. And a few thoughts that ran through my mind, and it's probably true for everybody else, very individual thought process, saying, what happens now? What do I do? What happens? And I'm sure that thought process must have run through every single individual's mind. Insofar as we talk about the geography of India, there may be people lived elsewhere, etc. But I think it starts there, and a year is a very long time. We've looked at the fact that this digital push, a lot has changed, but I'd like to put it into three buckets. I think it's like the traditional curve. The first is a shock, right? Saying this disruption, what's going to happen? I think the different strata of society responded very differently to it. There were people, didn't matter to them. A lot of the people sitting in the room, it is what it is. Don't have cash for a couple of days. It didn't matter. Life went on. A lot of people in certain sectors, and I have personal experience, had to change their model of working because the business was so much in cash that they had to evolve parallel contracting mechanisms. Either I pay you later, IOUs, etc., and say we'll settle this over a period of time. I'm talking about the beauty of how somebody handles disruption. And I think there was a third sector I personally think were completely excluded, and I think there's a whole challenge there about how to deal with that, because I don't think they knew much of what is happening. Currency is not there, how to deal with it, right? And I can certainly tell examples, tea workers in Assam and certain other places of India where the economy had no choice but to figure out what to do as an alternative. So if you take these three categories of users and how disruption altered their lives over the course of the year, I think the first 3 months was about the realization, saying what are we going to do? Sunil had very different experience of how to deal with the absence of cash. We dealt with this whole challenge that Mr. Butt spoke about, saying how do we get these ATMs recalibrated? Cash is coming, but how do we deal with that issue? And I think it was only about Feb to May or June that some patterns started emerging, and I think this is very important. The moment cash started circulating back in the economy, and it's fairly interesting data. When we look at a lot of large data sets, because we process a significant amount of the country's payment transactions. So whether it's an ATM transaction originating somewhere, or whether it's a transaction on a POS, or it's an e-com transaction, we tend to see a lot of these anonymized data patterns. What's the average value of a transaction? What's the average value of a cash withdrawal? Is that it isn't as though the digital transactions replaced the cash transactions. What's happened today is that the digital volumes have picked up, and I think every newspaper has covered the stats today, and we kind of backed it up as well, that the digital transactions have doubled and stayed at that level. In fact, the first few weeks after demonetization, it was 300-400%, because people had no choice. But it's since stabilized. And I think with cash returning back in the system, the surprising statistic is that those transactions are also back, with cash returning in the economy, cash withdrawals, usage of cash in the system. The third and most important aspect, which is the last phase, probably from July to now, and some of these things, is the change in patterns of permanent change in people's behavior. There are certain changes that I think all of us have done in terms of permanently changing our behavior. Certain actions have moved completely digital. Some actions we have said, we'll do quasi, some cash, etc. I'm not referring to individual behavior, but patterns of behavior. So to your question, saying as a technology provider, how do we deal with this kind of a challenge or a change? I think what Rajiv said is very important, is that every time you start a new journey, and for both Rishi and for Rajiv, starting of a new bank, the great advantage is no legacy, right? The year that went by, I think, I'll defer to them to express their opinion. Pre-November 8, they would have said that we need to follow the tradition of what other banks are doing as far as technology is concerned. If nothing else, at least to do certain services on par with what they are doing. But today it gives them a fresh look and say, you know what they are doing. It gives us a chance to build a new platform from scratch for whatever reason. It could be Aadhaar, it could be emphasis on KYC, the Aadhaar-based payment systems, UPI, AEPS. I think the ability to say that, believe in yourself and say, I can really build a platform that's not built on legacy, I think is the big shift that we are seeing. The demand that we are seeing from our customers is that really, guys, we can build a new business. Equally, and I don't want to hide the fact that when we serve so many customers from an ATM business perspective, the importance of cash, so a lot of those customers are asking, saying, how can we make this entire portfolio more effective and more useful? Because let's not ignore, like the point I was making, that cash is important in significant parts of this country. So the focus is now shifting from not so much a tier 1 and an urban phenomenon, but moving to the rural areas where you will still need to support this. The support system has to support the complementarity of solutions. I think that's the way the shift is. It's not done. In my personal view, I think year is a very long time, but I think for permanent shift, patterns of behavior, you pick some examples, digitization, fully digitized villages, but now they've had to go back to cash for whatever reason. Telecom infrastructure, the settlement systems don't exist, customer education is a problem. Everybody runs it as a nice theme, but does not follow up to make sure that we are pushing the legal frameworks, the ability for somebody to dispute transactions. All of that has to follow through in a very sustained manner for there to be. I think it will happen, to stay positive, but for us to believe that one action would lead to all of these is time will tell. I think the push in the right sector. So that's, as a technology provider, those are the areas of push.
Now what we're going to do is, I have questions pouring in now. So what I'm going to try and do is, I'm going to try and choose the right question for the right person. I think I have one for you for sure. I think the person is Krishnan. The question asked is, most digital solutions, especially e-wallets, don't have a human interface channel for a customer. That would increase the cost and maybe even defeat the purpose. I'm adding that on my own. Are the solutions so mature to handle without any exception? Are there solutions designed assuming some amount of customer, and I hope this can make it to TV, some amount of customer screw-ups?
Okay, so yes, by design, a wallet is a digital product, and so is a debit card or a credit card, or for that matter QR code or UPI. What is bigger issue is, and let me take one step back and explain to you, the problem is not whether wallet has experienced problem or any other product has experienced problem. Is what is good for a bank is probably not good for a retailer. So you have a very funny situation. So you have a retailer, a merchant acquiring division of a bank goes there. Listen, this is a POS, start using it. The consumer banking division of that customer, that bank, goes and puts a QR code. Listen, use this QR code and do this acquiring. The new age bank goes there and puts a biometric and says, use Aadhaar Pay. The financial inclusion division of another bank goes there and says, put micro ATM and say, listen, do cash in, cash out, open bank account. The guy is confused. The guy is saying, listen, I am interested in selling my goods. I am not interested in all this. So, is there an opportunity? The answer is yes. Where is the disruption? When you said that, there is a cost, is there a viable model? So, today we say that the Apple or the Samsung have microprocessor or processing power, which 2-3 decades back was there in an IBM mainframe which fills up this hall. So I am showing a gadget to a gadget guru, but it's not a gadget. This is nothing but a bank in a box. So what you are doing is, all these options that you are putting, if you put all these options except over-the-counter purchase, where you are using any payment mechanism, the merchant is paying the processing fee, the card fee. For everything else, account opening, cash in, cash out, money transfer, and then there was one more player I forgot. The Amazon and Flipkart will say, oh, this shopkeeper is my reseller. So he is putting his inventory. So offline to online, financial inclusion, wallets. Wallets also, by the way, will become interoperable, so they will have an experiential flow because they will be able to do everything pretty much same at retail that has been done. So I am constantly focusing on physical payment because that's the larger market, which will bring a migration to the online market because $20 billion versus $2 trillion. If we move people from cash to digital in the retail, we'll move it to digital. So this bank in a box, he earns, and if he earns, then it makes his process easier. And on top of that, now he has another devil, GST and a CA and all that. So you need to have a GST software on this also. So if we are able to take care of the merchant's problem, he will push digitization.
He can concentrate on what he really wants to do, which is sell his product, and this is something that just works. That really is.
It's a bank in a box which compares to if you have a bank branch, and Barclays Bank at CEO has said that bank branch will face similar scenario as the video parlors, because now nobody has video parlor. Netflix has taken care of that. So over a period of time, if we have 200,000 ATMs and 100,000 bank branches and 650,000 villages, can you put so many bank branches? You can't. So you have to convert the bank branch model to a branchless banking model, which then becomes a revenue stream for a merchant rather than a merchant discount rate which he is paying and is feeling the pinch, and therefore you say, okay, if you want cash, it is this price, best buy, and if you use credit card or debit card, 2% extra I will take. So the moment you make the payment model to a business model, you are converting a person from cash to digital, and then you will push whether it is wallet or any other payment mechanism.
So now this one I think would be perfect for you. Can we have some view on the cost of digitization for banks and whether it's actually paying back? Because I know it's great to come onto a stage and talk about how awesome everything is, but the reality of it is, I think, what Anant wants to know. Can we have some view on the cost of digitization for banks and whether it's going to pay back into the future? Is it happening right now? Is this like an e-commerce venture where one day you'll make money out of it?
Just to add to what Rajiv was saying in the previous question, is that as a bank or as an entity, personally I feel that we should not push a customer to a direction that you have to do only this. I want to leave the choice with the customer. If we push him for adoption or particular manner, he feels, at least for that customer segment which we are talking about, he would feel why are we doing it, what is the purpose behind it. So let the customer decide whether he wants to move to digital, whether he wants to stay cash and move to digital over a period of time, because we saw the adoption of digital going up and then coming down over a period of time. So let the customer decide. Now coming to this question of cost for digitization, I think from a bank perspective, so we have to look at in two different perspectives. One is a bank and there is a fintech company. So a lot of people get confused between a fintech and a bank also. So from a bank perspective, it makes a lot of sense to go digital, because bank looks at as an alternate channel for banking. They look at what is the opportunity cost, what is the cost saving we are doing by giving an option to a customer to do transaction on a mobile banking or to do transaction on internet banking. Just to give you a terms of numbers, to do a transaction at a branch it is 100 rupees, ATM is 20 rupees, internet is 5 rupees and mobile is 50 paisa. So if a person goes to a branch, the bank would end up spending 100 rupees to do a balance inquiry or a cash. But the same thing, if it can be done on a mobile, it costs 50 paisa. Plus the volume of transactions can go up, the number of branches which a bank would like to put will come down. He can bring in lot more customers into the framework. We have seen some of the initiatives for some of the foreign banks, like DBS has taken up a DigiBank initiative, Kotak Bank recently launched 811, ICICI, SDFC, all of them have a mobile banking platform, and all of them are making money from the point of view that they are saving so much of money by adding new branches if they would have had to bring so many millions of customers. So from a bank perspective, it is a great story. As far as fintech is concerned, because they have been adding customers which are largely bank customers. So when we look at fintech, somebody who is already having a bank account or a smartphone, is being given a wallet or is available on a wallet platform. So he's already as a bank customer, so he looks at it as an alternate channel. For alternate channel to prosper and to acquire that alternate channel, the fintech companies are giving cashbacks, and thousands of crores of rupees have been spent in giving cashbacks, and the customer loyalty moves from one platform to the other platform depending upon who is giving a higher cashback. So from that point of view, for me, if I look at fintech, I really don't know whether eventually they will make money or not, because so much of money has already been burnt into setting up these platforms. But from a bank perspective, it is an alternate channels of doing banking, giving customer the experience of a digital framework and how to do transaction in a remote manner, in sitting at their homes or at their convenience. So from bank perspective, there is absolutely no question if that banks will definitely push it.
So now there's one question which I have about 7 or 8 people. I'll try and take all their names. If you need to promote digital, how do we create confidence on the chargeback process? Debit cards and chargeback rates are still high. Then the next one is, when will merchant fee come down? Why do we still rely on MasterCard, Visa? I mean, the whole point of it really is that this part of all banking and transactions remain the same, and we try to change everything else around it, and sometimes that's self-defeatist in purpose. You believe that all of that also needed to be changed?
I think one of the complaints that one heard across was that I'm being forced to use a credit card or a debit card, and yet I'm being charged a fee for it, and that fee didn't change. There was a small window, I think, where they said that we will take it away for a while, but it went right back. So, you know, there's a dichotomy in the fact that on one end, you're trying to promote digital transactions, digital banking and all of that. And on the other hand, the fee, which again is the stumbling point, whether from the vendor side or from the consumer side, it's always the fee around digitizing. I think that is the biggest stumbling point. Both as a
customers actually called it the penalty to go digital,
yes,
which is a very negative connotation to when we're trying to make a country move forward. One of the panelists had spoken about the fact that South Korea gave an incentive, tax breaks, and here we are paying a penalty to go. So is that something which needs to be looked into more seriously? And why do you think it wasn't done long term? Yes, it was a small little, you know, almost like when you have these new products and you say inauguration offer. That's it. That's all you got for a very short period of time. Why not do that long term to make an entire nation take to a larger cake and pudding?
Rajiv, in hindsight, this is something that, you know, you can do now, but at the time when it was happening, I don't think this really featured in the larger scheme of things when people were talking about digitalizing, when people were talking about transactions being moved to card, etc. The price
it
point
must have been thought about a little, because they did do it for a very short period.
Later.
So not right away, but whenever they did and then they reversed it back, that means it was thought of at one point.
I think it was more a reaction to feedback when people started, because everybody is live on social media these days. So there was a lot of pushback saying that we are being forced to do this, and of course all the rumor mongering and everything that goes with it. So there was this, and I think that 15-day or 20-day period was given more as a reaction, as a knee-jerk to that kind of mass feedback. But it hadn't been factored in when the whole process was being evolved. So yes, on hindsight, if you really want to promote digital transaction, and particularly on your debit card, why are you being charged to take your own money out of your bank? So once you actually look at those things and rationalize them a little bit, yes, there would be definitely a greater, but that would again depend on the people who are aware, who know what this is all about and who are using it. At the rural level, like other panelists have been saying, you know, people, I have seen places, I work with microfinance, which is like really poor households, and with 4.5 crore women that the sector covers. I have gone to places where women have actually, the RuPay card has been laminated and kept away, thinking that it was something, an award that was given to them because they opened a bank account. So I think there needs to be a bit of education around it, and I'm not talking about the larger literacy piece, basic education, basic security aspects around cards, etc. But if you integrate it, bring down the price points from both ends, yes, it is definitely a way to go.
Okay. So this question is to you. This is from Krishnan and I think Jignesh too. When licenses were given to small finance banks and payment banks that we're talking about right now, there were doubts whether these banks can compete with the biggies and make profit. With digital business kicking up suddenly, being nimble is key. Has this put these new players in a better position, and now the big players may not be able to handle the fact that they will grow much faster and quicker? In fact, you also spoke about that, also saying that they're in a great position to do things much faster. You believe that this is what the new banking, and that's why it's banking, the time for banking is great, because these new players will be able to forge brand new paths never seen before?
Yes, absolutely. I mean, all the new banking license and the charters that have been given by the Apex Bank over the last couple of years, that will certainly pave a new path in terms of the way forward. First, as Rama has mentioned, there is no legacy for them to carry forward. They have a new platform to scratch across. They have all the new technologies. They don't have any customer expectations in terms of what it used to be. So they have something fresh to start across. And also importantly, the entire thrust, the entire focus has to be more often covering the inclusiveness of the financial platform. So financial inclusion is going to be the key. And what I believe, what I also say, to ensure that they get succeeded in the times to come, all the exposure limits and the transaction limits that the RBI has imposed a restriction on, that would be further relaxed across in terms to, so that they have a better coverage, they have a better facility in terms to ensure that with the technological integrations, with the financial inclusiveness, everything gets fairly covered across. So in that context, yes, all the new banking license to the small finance banks and also to the payment bank that has been given across in the last couple of years, that would certainly give a fair amount of advantage in terms of taking the way forward ahead.
All right. So now once again, the last panelist on that side gets the final word. Once again, all these panelists will be available right after, so if you have any direct questions, please do come to them and have a chat. Now this is my favorite question. It's also come from the audience. Almost every single time when we talk about banking currently and in the future, a lot of technology is always thrown, and then a very vivid and beautiful picture of the future is always shown of AI, it was mentioned in the last panel, robotics, how we will suddenly have this golden era of banking because technology will play a huge role. Isn't that where we are really missing the big picture? Don't you think that in itself, this rosy picture that is shown, leads to too much expectation, too much aspiration, and then you're not getting that the customer is actually getting more and more frustrated with what is real banking is right now? Maybe we should stop talking about the future, make the current a little bit better, only bring in technology that makes the customer's life now easier, not necessarily only on the other side of the counter where the banks exist. How about technology that will improve the customer relationship and the customer experience with the bank? We hear very less about that for some strange reason. So is the golden era only for the banks themselves and not for those who bank with the bank?
No, great question. In fact, this has been a thought process that we've been hearing on multiple dimensions from the time that somebody said there was a rogue bot on one of the social media sites, and somebody figured out it wasn't really true, but it made good news, and I think that's when this whole story around AI and robotics and everything came through. I was watching, I think this was Microsoft CEO's interview on television, talking about whether humans will be more intelligent or the robots will be more intelligent. I may be wrong, but the thrust of what really somebody was saying is that once you capture the essence of the relationship, and that's really difficult for a bot or a robot to capture, and so much easier for a human being to understand. I think that piece is definitely, especially when it comes to banking, you cannot lose that. Now, how do you allow that and the digital where almost...
There are so many airlines, banks and others that have already put in something called chat bots, which is an extremely frustrating experience.
Absolutely.
Except for the people who've actually put the chatbots. Yeah. They are very happy about the fact that they put it. Yeah, so where is the problem? Is there a gap in not understanding that, don't be experimental with technology with your own customer?
I was coming to that, because the point is, right, when you say banking is all about relationship, and you see a lot of banks tagline saying it's about relationship, it's used somewhere or the other, and on the other you have digital, you have chatbots, right? How does that change? I think here is where the human computing interface will probably make a difference. Can I interface in a manner or in a language or in an aspect that the individual is more comfortable with, and therefore I can give a quasi real-time experience. It could be natural language. In fact, we have one at the booth outside, very comfortable with processing in Hindi. You could look at it as an Alexa equivalent, but allows you to do a lot of banking related actions. I think to that extent, if somebody goes that extra mile to make that happen, I think we will see a lot more of that, the relationship, the stickiness, without the buzzwords kicking in and saying this doesn't make sense for me anymore. There is benefit. Let's not miss the wood for the trees. If you look at a lot of the banking systems today, and I'm a biggest critic of what we build ourselves, is that we have tried to mimic what a lot of banking people do. So you go to a bank, you do RTGS, NEFT, you're mimicking what a teller does. Really what you want to do is, I want to send money to you, right? Somebody says, what's the from account, what's the to account, drop down, pick it, which is the IFSC code, which branch, is it correct? So that entire process, you could say everybody is comfortable with, but is it necessary? Because what I really wanted to do was to send you 10,000 rupees or pay my maid 5,000 rupees. Yes, there is technology that makes things easier, but I don't know whether we have started tackling those kind of problems. It's getting better, but if you were to say stop, relook at some of the things, can you make it better? I would say that the focus will be in those areas. It's happening. It's not that it's not happening, because a lot of the startups today are disrupting banking itself. We are talking about banking, but banking is getting disrupted. People are saying, I don't need a bank to move funds. I don't need a bank to hold money. I don't need a bank to do investments, especially with API, gateway, exposed banking systems so that consumers can take hold of their data. They can do what they want with the data that they are doing. It's not AI or that level of sophistication, but the level at which we are today, I think there will be pressure. Europe already has passed regulation. RBI is looking at very seriously at that aspect of it, and I think that's probably where focus on the current in terms of improving certain aspects which could be done a lot better incrementally, but also be prepared for a time in the future where a lot of their ecosystem, where money is being moved, bought, stored, held, etc., may actually be controlled by entities outside of the regular banking system, but within the banking.
I'm glad you spoke about the fact that people are questioning, do I need a bank? Do I need a bank to hold my money? The big question being asked is, do I need money? Because the bitcoins and the cryptocurrency actually are making sure that you don't even need traditional money. So it would have been great to get into that, but unfortunately I'm completely out of time. So thank you so much to this panel, and thank you very much for taking us through. Like I said, they will be available for more discussions. They're all here. So do come forward and have a chat with them. I'll just end on this note. It's obviously been established that this is a new golden era for banking for sure. The seeds have been put in, the infrastructure is great, the foundation seems to be fantastic, but there are many new things that will get built on this new building of banking. It's going to be a great next few years, and I believe that the best part of it is that the customer will eventually win. So on that note, thank you so much for listening to us. Thank you to the panel. Thank you to everybody in the audience. Thank you.